Hey, this is Josh. Today is Friday, July 14th. I didn't get a chance to do a video yesterday, so real quickly I'll go over yesterday. The day before was a sell signal on the daily chart. Prices opened with a gap down, triggering the sell signal. The bears tried for a bear trend from the open, but failed on the third bar of the day. This is also a sell climax on it if you look at the overnight data. So failed bear breakout of the prior day's low, sell climax, big outside bull reversal bar, was likely to lead to two legs up. You could say this is the first leg up, this is the second leg up, or you can say first leg up and then today's rally is the second leg up. Doesn't necessarily matter. The bulls filled the bear gap open. They tried to break above the trading range from the prior day. But again, this was strong resistance for the bulls the day before, and again they were unable to break above. So it formed a high of a trading range. Also formed a nested expanding triangle. So this was an okay swing buy if you expected more of a second leg up. I thought that there would probably be at least a two-legged correction before any type of bull channel formed. The bulls did try to form a channel here, and at some point I thought that there was going to be a bull channel here, where the bulls were unable to hold the trend line. So prices formed a trading range. This was an okay swing buy, but didn't go very far before reversal. Low 2 sell set up here, also a failed high 2, the top of the trading range, tested the middle of the prior day's trading range. Acceptable scalp to sell below there. You could argue the market became always in short here on the bear follow through bar. It wasn't very strong. The bear selling did not go very far, but it was the third consecutive bear bar. This was a weak high 1, weak high 2 at the top of a trading range. You can consider selling above with a limit order. I would say the market clearly became always in short on one of these two bars, the bear breakout below this small trading range. Also this failed high 2, strong bear breakout here. So this was an outside bull bar. The bulls tried to form a double bottom bull flag and start of a bull channel here with a trend line here. Bulls did not get follow through and it failed. Came a failed high 2 sell setup here. It led to a small sell climax, bear breakout. The bear breakout did not go. The bears did not get really strong follow through. This was around a 50% pullback from the start of this rally. You could argue selling below here, although it's a low one, but you're nearing possible support, and there's a potential small sell climax here. So you could argue that the bulls were trapped to bought above here due to the spread, but it was better to wait for a second entry or some type of stronger reversal. So you could argue buying below here, but with the little buying pressure in this sell-off, I did not think that was a great idea. So prices entered a small tight trading range, small final bear flag. This is the first entry for the small sell climax and reversal and test of up to here. Here's a better second entry buy setup. Personally, I would prefer to take that for a swing buy. The bulls got follow through here, so switched back to always in long, but did not end up reaching a swing profit before prices reversed strongly. This was a test of the middle of the tight trading range. This was a bit of a surprise bar. It was a weak sell signal. It's a second entry, first entry here, second entry here, but it's a bull bar. Not all that great of a sell signal. So you got to take it for a swing trade. It was a bit of a surprise. I didn't expect that to happen. But what happened is the bulls who bought through here, holding for a second leg up, did not like this sell-off, scaled in, ended up exiting, and the bears came back in aggressively. So bear breakout, I thought this was a possible sell vacuum test of a bull trend line, but did not end up holding. Always remember, there's got to be 3 tests of a trend before a trend line is formed. 3 touches before the trend line is legit. So breakout pullback, low one sell setup here. Reasonable to take. Could also consider it a low 2 first entry, second entry. Strong bear entry bar. Okay, bear follow through. Signs of some buying pressure around here. Bear breakout. Bear breakout to below here. This was a small final flag reversal. Very small sell climax. I think it was around a measured move target from the bear measuring gap. Near there. I think it's also near a leg 1 equals leg 2 move. Prices went a little bit further. So this was here was a failed bull reversal and a low 1 sell setup, nearing the low, but acceptable, reasonable swing short. Did not go very far before the bulls returned. The bears were unwilling to sell on a stop below here. Became a failed low 2 here, out in a bit. I thought yesterday was an outside bull bar, but still a high 2 buy setup, failed low 2, reasonable swing buy. Good bull follow through, good bull entry bar, good bull follow through. Became always in long here or here. EMA gap bar, but pretty weak compared to the strong buying. Failed low 2, failed bear breakout of the low. So entered a small channel here, micro channel. Got the break, test of the high, closed near the middle of the day for a doji day, which is common on a trading range day. Okay, so today opened with a tight trading range, small gap up, always in long. The bears tried for a low 2, failed bull breakout, this is around the high of the trading range of yesterday and the prior day. On this news announcement, there was a strong bull breakout from the failed low 2, also a double bottom bull flag. The bull follow through was not all that great, so buying this close probably not the best idea. This was a spike and climax bull trend, so the spike and then the second climax here. So the spike is the first climax, second climax was likely to lead to 2 legs down, which it did, first leg, second leg. However, the bears were unable to break below here, which formed a double bottom bull flag and start of a trading range. So could argue buying one of these closes, but personally during a climax I would wait for a better entry. So this was a weak sell signal for the climax and reversal. It's too risky to buy below because it is a climax, so you never know, it could reverse down strongly, which it did. So bear entry bar, weak bear follow through, but the bulls that bought this close are exiting. At least most of them are, or they should be. So high 1 buy setup, bear bar, but pretty sideways now. You can consider selling above, but until prices flip to always in short, I would not want to sell above a bear bar for a weak high 1 after a climax. This was a high 2 buy setup, but again after a climax, so this was during another news announcement. So became a failed high 2 sell setup. This would best be taken as a swing. Hang on. Okay, sorry, I got cut off at 10 minutes. So This became this was during a news announcement too, so it was kind of quick, so you had to be quick. But selling below here on a stop for a failed high 2, low 2 it's also a final flag without where the breakout did not occur past the small trading range, still considered a final flag reversal. So okay to take for a swing down, probably high enough probability for a scalp, but better to take for a swing. So big bear bar closed below the EMA, but the bears did not get strong follow through. Instead, the bulls bought the close, became a pretty strong bull bar, and led to a test of this close, which you can see the bulls exited on a test of the close. So this was a week low one. You can't really tell, but prices slightly ticked below here. But you would have had to have bought around this close in order to get filled. And at that point, it's in the middle of the trading range, so only 50-50 probability, maybe a slight bull advantage. This was you could say this is the second entry, first entry here, second entry short here for a double top. Did not go very far before the bulls came back in, but this is nearing the high of a trading range, so bulls are starting to take profits, and the bulls that scaled in here or bought here, scaled in, are starting to exit here. Bears are starting to sell above highs. This was a low 2 sell setup near the high of a trading range, but it's a bull bar. Probably high enough probability for a scalp since it's a low 2 at the top of a trading range, but since it's a bull bar, better to take as a swing trade. This became a failed high 2 sell setup, so selling below here is an acceptable scalp. So on this outside bear bar, it became a failed high 2. Again, the bears were unable to get a strong breakout below here, and this is around the start of the second climax. So this is where prices were likely to at least test to. So you had the spike, climax, test of the climax, formed a double bottom bull flag. You can also consider it a double bottom pullback, as this is the double bottom and the double bottom pullback. However, it's a bear bar, so swing trade, it would have been, it had a second entry developed or a week low one, it would have been acceptable to scalp. But that didn't happen before prices rallied strongly. So bull entry bar, bull follow through. I'd say prices became always in long clearly here, if not here. So this was a week low. Well, this is a good example of a 50-50 entry. So buying below this bar was a reasonable thing to do if you're willing to scale in if prices get down to here. Otherwise, I don't think the probability is high enough without scaling in. So you either swing short or wait, or buy below and plan on scaling in if you need to. So the probability, directional probability, probably slightly favored the bulls, maybe 45-55%. The bulls 55%, but too close to 50-50 for me. I prefer high probability entries. So almost an outside bull bar for a failed reversal. This formed the bears attempted to form a bear channel here, which it did hold for a while, but the bulls were able to break above here. This was a weak sell setup, so I figured there were buyers below, because I was expecting, after the failed bear breakout, I was expecting prices to at least attempt to break out above, which they did just after a pullback first. So this was a weak sell signal. You could take it for a swing short, but not all that strong. So the bulls who bought here scaled in and ultimately were able to get out or hold for a smaller profit, or for a profit. The bears that sold here sold more up here, exited, contributed to this pretty strong rally. So this is there's a bull measuring gap here, which is probably where prices are heading to, which is this target here. So this was a buy setup for a failed low 2, but it's a high 1 near the high of a trading range. Bears sold above. Bulls were not willing to commit strongly. The bulls are waiting to scale in down here. The bulls formed a double bottom bull flag here with here. Also start of a channel, which the trend channel didn't hold. Slight trend channel overshoot. So the bulls holding for a second leg up. This is a reasonable buy setup for a double bottom bull flag. Also a larger high 2, 1, 2. Also kind of a failed low 2, a variant. First entry, second entry. And again, like I said, the bears who had sold this entry scaled in and are exiting. Bull entry bar, bull fall outside bull bar. You could try buying below this bar. I don't know if you'd be filled, probably not. Bull breakout. So the bears failed to generate a strong reversal, so prices remained always in long from here for a second leg up. Bull breakout, no real strong sell setup. Here's an II sell setup. Also a low 2, first entry, second entry near the high of a trading range. But like I said, I thought that the bulls would at least get a test above the high of the trading range after the failed bear breakout below. So now prices are in this tight bull micro channel, and will probably end up closing around the high of the day. If you look at the higher time frame charts, so here's the daily chart. As of now, at the failed low 2, a big strong bull bar, probably going to close somewhere near the high of the day today for a failed bear reversal. This is a potential measuring gap. But it's getting pretty climactic. Oops. So here's the breakout gap, possible measuring gap here. So we're at that measured move target. The bulls want to keep this gap open for a possible measuring gap. This point, it's possible. Pretty far up above here. I think that the prices will probably test the EMA. The bulls who bought this close will probably exit and wait. Bears may start selling above highs for a test down, possibly test down to the middle of this converging triangle. And it's also the bottom of a buy climax. On the weekly chart, it was a week high 1 at the top of a trading range. You can see the converging triangle a little bit better here. So was a week high 1 buy setup at the top of a trading range. But since this is a final flag reversal, pretty strong buying pressure up to the high of the trading range. I'm thinking that prices will probably at least test to around the high above these highs before there's a strong reversal back down, which I believe that's probably around that other measured move target that I mentioned. Here's a possible measured move target. So possible prices get up here before the bears are willing to sell aggressively. The bears would have preferred this to become and for most of the week, prices stayed below here, and it looked like prices may reverse down. However, today, the bulls came in strongly and are turning it into a bull breakout bar. So if the bulls follow through next week, we could see a measured move up based on the height of this trading range, which I think is a lower high. Sorry, I got cut off again. So if the bulls get follow through buying next week, we could see a measured move up, which is a test of the prior lows on the monthly chart. So not unreasonable target. And you can see this is a really strong bull breakout on the monthly chart from a final flag reversal. Also, you could also argue it's a wedge bottom. 1, 2, 3. I would call it a final flag reversal. Likely to get a second leg up, or at least a small one. So, like I said, prices are probably going to test above these highs before the bears start selling aggressively. I think that was about all I had, and hope you guys have a good weekend.